Thank you for joining us, coming in a bit early. We'll give it a couple of minutes before we'll get started. If you're here and you're watching, just drop me a message. Let me know that you're here. Leave a comment. We'll get started shortly. Okay, let's give it a minute and then we shall start. For everyone who is joining us today, we're going through the top price action setups. Okay, so again, thank you all for joining us today. We are covering the topic about the top price action setups. What I'll be sharing with you a bit more about will be, how to look at price action setups, the characteristics, the different setups that you could be looking for. And then what we'll do is we'll jump onto the charts as well to identify some possible trade setups using that price action that we've just gone through, right? So if you are joining us again, you're here on Vantage on the webinar doing the top price action setups. Just to share with you again, a quick disclaimer as usual for every webinar. Before we start every webinar, we have a quick disclaimer. Information shared during this presentation and on the following slides are solely those of the presenter, not necessarily those of Vantage. And should be used solely for educational purposes as well. They do not constitute investment advice or consultation on how a client should trade. Vantage does not guarantee the accuracy or reliability of the information provided herein. What in general terms is that you should also be looking at, considering your risk profile, do your own analysis prior to entering any trades, from what you heard or gather from this webinar. With that, usually Desmond does this webinar, but there is a bug going around and he isn't feeling too well. So I'm here standing in for him. I am Jin, most will call me Jin. I'm Jin Dao here. I'm one of the prop traders here, with the whole team of analysts to support your trading ideas or your trading strategies. I'm here to share with you more about the top price action setups. Oops. So what to expect? We've got a few things to get through today. So what to expect from today's session? One, first of all, most importantly, is an introduction towards price action, how to trade using price action, what to consider when you look at price action. Secondly, the anatomy of a candlestick. So candlesticks actually gives you the characteristics, or gives you a bit of an indication into how price moves, what it means with a big tall body or a long tail, what it all means. Is it strength? Is it change? Is it indecision? The anatomy of a candlestick can actually give you quite a good hint or quite a good advice into what to expect in the markets. All right. If you have any questions, please feel free to put it into the chat as well. I myself am coughing a bit, so pardon the coughing and the abrupt coughing there. I'll go through as well with you the top 3 single candlestick setups. Following from that, the top 2 double candlestick setups, and then the top 2 triple candlestick setups. So as you can more or less gather, if you're a bit more advanced or a bit more experienced with your trading, you would know that a single candlestick setup is probably going to be a bit less or have less probability than a double candlestick setup. And then that again will have less probability compared to a triple candlestick setup. But then again, if you consider a triple against a double or a single, a triple candlestick setup will have or will take more time to develop, because you need 3 candlesticks to form that triple candlestick setups. And if you're looking at this on an H1 time frame, that could be a 3-hour wait. If you're looking at this on H4 time frame, that could be a 12-hour wait, compared to a single candlestick setup, which happens in that 1 hour, could happen within that 1 hour time frame. So quite a few things to get through, looking at price action, looking at the anatomy of a candlestick, the single candlestick setups, the double candlestick setups, and the triple candlestick setups. Hey, good to know you're a Vantage fan there. Good to meet a couple of fans here. I hope you find this session useful with your trading setups. Right, so as we go through that, the first part, the anatomy of a candlestick, right? We did a bit of an introduction there, why you use price action. So before I jump into this, let's get back to that. The introduction to price action is, why do you use price action? A lot of times we look at the charts, right? Most traders, when they first start off, all they do, they fire up MT4, they fire up the platform, they fire up the charts, and they look at only the candlesticks. And there is a belief that the way price moves, the way the candlestick moves, gives you that indication or gives you an interpretation of how price moves, and gives you an idea of what could be the next move, the next setup. So that's one reason why when we look at price action, it gives you the sentiment of the market, telling you whether the move is likely to reverse or whether it's likely to continue towards upside or the downside. But as we all know, that if you're looking at price action, then you need to pay close attention to the candlesticks. So what it means here by candlesticks is that as we look into the different types of candlesticks, right? The first one here on the green side is the bullish candle. Bullish candle is when price opens below and price closes above. You see the body there pushing towards upside. The high price is indicated by the wick, and then the downside, the low price, is indicated by a lower wick. So if we come to a scenario where we have a long wick towards upside, a long upper wick, we can see that price has tried going towards the upside. Or in the other scenario, if we do see a long lower wick, a big line towards the downside, but then price still closes above, that gives us a bit of an indication that, hey, markets have been trying to sell it down, but in the overall direction within that period, prices have still closed above, and it gives us an indication that we're likely to see further upside following that candle. So here on the bullish candle or on a bearish candle, candles can be on the M1 time frame, M5, M15, M30, H1, H4 daily time frame. What this means is that on the different time intervals, on all the different time intervals, every candle can be represented, right? So we could have a price open and within an hour close above, or within 4 hours close above, or within a day and it closes above. On the flip side, we do have the bearish candle, right? On the flip side, with the bearish candle, where price opens higher, but closes lower on the close of the candle. At the close of that interval, it closes lower, right? So here we have, in this bearish candle, the upper wick will be the high price, open price, the close, and then the lower price. So what, and flip side is you could see that if price opened, and then we had a big tail, but then it closed still lower than the open price with no upper wick, that would tell us that the selling pressure is quite high towards the downside, because we're looking at price open, a big test lower before closing below the open price, with no upside potential. That shows us that markets are looking to sell down significantly, winning out those buyers. So we see that downside move, or the next likely scenario is further downside. So that quite simply, trying to keep it a bit simple, that's the way to look at a candlesticks. It's only made up of these few components: the body, which has the open price and the close price, the upper wick, which is the high price, and the lower wick, which is the low price. So a lot of times what we look at for candlesticks, or we look at for price action, it's really, one of it is that reversal, right? One of it is the reversal. And how do we look for reversals? Is really that test of the channels, right? You can see that what we can see here is a lot of times price might be dropping towards that lower line of the channel there. Most people, if they weren't looking at it, they'll be thinking, hey, can this drop all the way? Can this break down from this point? Let me find my, right? You'll be looking for it to break lower from this point. But what you could also be looking at is a possible reversal if it comes down, or look for signals for reversal if it comes towards this point for a possible bounce back up. Things like this, it could be driven by several different reasons. One of it could be a fundamental news. It could be a news, interest rate increase or a change in policy that could cause price to reverse. Or you could also be looking at price action where it comes down to this point here, and then we see more buyers coming into the market, buying at this support level or this channel level to push price towards upside. So in this case, we have the morning star formation. I'll clear out those lines so it's easier to see. Oops, sorry about that. Let me do that again. Right, so clear out that. You can see that that big price drop went down, hit that channel, hit the bottom of that upward channel before now bouncing back up. You can see a formation there of a morning star formation to push price up towards upside, right? So there are different ways of looking at this. This is one example of a single chart, single price action pattern being applied. I'll show you here. Then the next point, you can see that as it breaks above that point, drawing my line. This is a good resistance level here. There's a bit of a support zone there. Another point there. That's why we have that horizontal line right across, right? So different ways to look at the price action. It's a lot of times, traders will be looking at just that formation. I'll zoom back again. We'll be just looking at that formation of the morning star there and looking to buy in right at that point. That could be possible, but that's a little bit risky just because, you know, as it comes down, test that point, confirmation of this level will be for it to break up above that resistance level towards the upside. So there are two ways you can look at it. One, a bit of an earlier entry to jump in as formation of that morning star, or as it moves up, a confirmation will be towards the upside as well. So there's one early chance and two chances to get into that trade as it rejects that support level, morning star formation, breaking that resistance level towards the upside, right? So you can use price action in a single price action setup, single candle setup for that reversal. Alternatively, you have the breakout formation where you can see that in this case it's been hitting again. It's been hitting that, where's my mouse? Right, it's been hitting that level there, and again, and again, and again. So it's been hitting that resistance level several times, failing to break above, but with that price action again, as we see in this case, that three white soldiers, 1, 2, 3, right? Three white soldiers pushing towards the upside, now breaking above resistance, right? Breaking above resistance. So different ways you can look at this is as it resisted once. Oh, move that back. As it resisted once and twice, we've seen that price turn down here. What we can see is that as it reverses back 1, 2, most people would think that it's going to, resistance level is going to hold at that point. But in this case, the third candle actually broke above that resistance level. What you could be looking for here, and this is a confirmation, right? Is a price action, 3 candle price action confirmation, giving you the indication that says, hey, we've got 3 white soldiers pushing up, breaking above that resistance level towards, and more upside is likely pushing towards the upside. Okay. So if I do that, 3 white soldiers there, 1, 2, 3, and then you can see that pushing up towards upside. Things to also pay attention to here is that this gives you the price action here. Again, back to those 3, 1 here, 2, and 3. It broke above that resistance level here, indicating to you further upside is likely. If you're a little bit more risk-taking, you could jump into that trade or that setup, a 3 candle setup based on the price action of a 3 white soldiers, or an alternatively is also to consider this level here. Oops, not a straight line, but thereabouts. So you can see that as we push up towards upside, it gives you an early indication that we're looking for further upside. You could be looking to buy in at this point, or you could be looking for it to break above that resistance level. Look for it to break above that resistance level before buying up towards the upside. So you've got multiple, I'll clear it out again just to clarify. You've got multiple trade ideas or trade setups here. One, a bit early as it pushes up, you could be looking for a completion of that 3 candles. You could be looking to get in there. If you're a little bit more risk adverse, you could be looking to get in as it breaks above that recent high point, and then you could be looking to get in at about that level or that level there. But all in all is that you would be a bit more confident with your trade setup after seeing that move, that 3 white candle move towards the upside, breaking that resistance level. So, you know, a lot of times when you're trading, it's all about that confidence. It's a setup you see and the confidence in jumping onto that setup. In this case, you have multiple confluences of indicators, or not indicators, of price action and price movements to give you that confidence. One, breaking that resistance. Two, that price action pushing higher. Three, breaking that near-term resistance again, and then again at that point. So multiple trade setups to help you build that confidence for that potential move towards the upside. So looking at the top three, there are multiple, there are a whole variety of different single candlestick patterns, double candlestick patterns, or triple candlestick patterns. But the top three that we look at here, and even for myself, I use this on multiple occasions, is the first one, the hammer. All right. I'll show you quickly first the hammer, the inverted hammer, the shooting star, the doji. Right? So those are the three that we look at. But bear in mind, it's not just the price action. As I was describing with you on the previous few examples that we were looking at before, is that you shouldn't just look at price action alone, right? You shouldn't look at just price action alone. Why? It's because a hammer could indicate a reversal. A hammer could indicate a reversal, but if you consider that, let's say the last move has been a big downward drop, a huge downward drop, and the next support level is significantly below, let's say at that point there, and you see a hammer form here. This reversal might be only short term. This reversal might be only short term before a resumption towards the downside. So just be a bit more careful when you're looking at candlestick patterns or single candlestick patterns, because that move, you want to follow trend a little bit more than just looking at candlestick patterns. So if it's a big downward move before and a hammer forms without a support level, or for no real clear reasons apart from just being a hammer, I think that we might see some upside, but it's more likely to reverse back down again. On the other hand, if we saw in this case, it was actually a big move towards upside, a small downward move, and then you see that hammer form, and possibly towards that point, you could see a support level there as well. So if you have trend following on with you, so we've seen it moving towards upside, we see a hammer forming at a support level, then this would indicate that this is a start, possibly a start of a renewed move back towards the upside. All right, so for me, I don't look at just the candlestick alone or the single candlestick alone. I look at the trend and also the support resistance levels, just to make sure that the candlesticks are occurring at a reasonable location, which is rejection of a support level or rejection of a resistance level. And then also to make sure that it follows the trend, or if I'm going against trend, I know that I'm doing a counter trend trade. I'm going to be a bit more careful with the trade. I'll be watching it more closely, possibly closing out or managing the trade more closely rather than letting it run, expecting a big move, a big counter trend move. Same thing, or in reverse, the hanging man, which is a reversal pattern. Again, I would look at the trend before that, but you can see that it was a big test towards the downside. You can see that lower wick forming towards the downside, very little upper wick or upper shadow towards the upside, but price closing lower. All right, price closing lower. In this case, this indicates a reversal for further or resumption towards the downside. Same thing, I'm going to repeat myself one last time, is that if this was a big upward move and I see a hanging man there, I'm not likely to jump into a trade thinking that it's going to reverse unless it happens at a resistance level there. And then I have some other news that might indicate that I expect to see some weakness into the currency. Or if I see that downward move, a small rebound, I'll clear that out. Downward move, a rebound, and then that happens at a resistance level, then I'll be more confident to say, hey, that hanging man is giving an indication towards anticipation of further downside, right? So this is one of the ways to look at a single candlestick patterns. I always consider it together with the trend and also the support resistance levels. On the flip side, inverted hammer is a reverse of what we saw here, the hammer. So the inverted hammer gives you the indication of a reversal as well. In this case, testing higher and the price actually closing higher as well, slightly higher, giving us an indication of a reversal, and a shooting star, which is actually the reverse of a hammer towards the upside. You can see the push higher. In this case, what it actually tells you here is that prices tried, or market tried to test higher. It tried to test higher towards this point, but overall sellers won. There were more sellers than buyers, so we saw price come down and close off at this point here, anticipating that move towards the downside. Again, in this case, I would maybe discount the trend a little bit, but I would still look for a shooting star to happen at a resistance level for a better confirmation of the signal towards selling down, together with using price action, together with using that candlestick patterns. Right. And I like dojis, right? Most of the times when I see a dragonfly doji or a gravestone doji, what it tells me is that markets are undecided. Markets are severely undecided. You see that move towards the downside, and then you see the next move is that it tried to go lower. It's bounced back up, and it's sitting right as it started, right? It came down, it went back up within the hour, or within the 4 hours, or within that time frame, tested lower, sat there. In this case, it shows you a little bit of indecision. At this point, a lot of times people would have tried to sell down at that level. What you're going to do here is to wait it out a little bit. Wait it out. Look at the next candle. You might actually see that reversal back up, because markets have tried to sell it down. Markets have tried to sell it down, but sellers lost against the buyers, but yet buyers have not really jumped on board yet. So we haven't seen that big or that small upward move, right? If we actually did see the upward move, then you'll see formation of a hammer there, but we haven't seen that formation yet. It's set in the doji format. So there's a bit of indecision, but what we can expect here, or what we'll be looking for here, will be that move towards the upside in the dragonfly doji, or in the reverse side in the gravestone doji. Tried to test higher, failed to test higher, failed to close higher, closing off with indecision. Likelihood here, we're looking for that downward move in the next or the subsequent few candles again, right? So those of you who are joining us again on this live stream, whether on Facebook or YouTube, if you have a question, please feel free to put it into the chat or into the comments. I'll be happy to help you through your questions. Failing without that, the next one we look at is the top 2 double candlestick patterns. Top 2 double candlestick patterns. And this is actually easy to spot. This is relatively easy to spot when you're looking at your charts. The first one, the bullish engulfing candle. What's a bullish engulfing candle? Imagine this is on the H4 time frame. For the last 4 hours, you have seen that price started here. Price started at this point here. And then for the last 4 hours, it's dropped lower. It's closed off here. Not much upside, not much downside. Following on from that, the next candle, you see price opens at this point, and within that 4 hours, tested higher, tested lower, but eventually closed off above the previous opening price, above the previous opening price. So what this actually shows you, right? This actually shows you that after this after this selling momentum, it was followed up with a big upward move. It was followed up with a big upward move that has engulfed. That's why we have the word engulfing there. Has engulfed the previous move of the candle. It's engulfed the previous candle and pushed towards the upside. Criteria for this is that price has to be above the previous opening price. It has to be a upward move above the previous opening price. If it's a stronger move, even better. This what happens after a bullish engulfing is that we're expecting price to push towards the upside, to push higher towards the upside. On the flip side, when we look at the bearish engulfing, is that you can see price tried to go up, but within the next candle, this could be an H1 candle here. For 1 hour, it tried to go up. The next hour, it completely reverses that move towards upside and actually close lower. What this could actually be interpreted towards is that buyers were trying to push it up, but they got exhausted at that point. And then from that level, sellers came into the market and pushed price even beyond what buyers were looking at for more downside. Right? Overall market sentiment in this case will be to be looking for further downside in that currency pair or in that price. So what we can be looking for here is as price breaks towards the downside, in the subsequent candles, you could be looking for selling opportunities towards the downside if you see that bearish engulfing candle setup. Another thing, I try to pick this out. This is something that I want to get onto quite a bit, but I haven't really found too much of this setups occur. It does occur quite nicely on a smaller time frame, but beware when you're trading on a smaller time frame, you do have quite a bit more volatility. Price action or candlestick patterns do play out, but they might have smaller price targets rather than if you're looking at this on the bigger time frame. So I see this happen on a smaller time frames here. The tweezer bottoms and the tweezer tops. Tweezer bottoms are that move towards the downside. It tried to go lower, closed off, and then the next moment it tried to go lower again, but ended up closing higher. Again, just to repeat, tweezer bottoms are when we see price tracking lower, right? The candle there could be a H1 or M15 candle. It started off at this point, tracked down, but then closed off halfway or about there. And then the next hour, you can see it tried to go down some more, but eventually closed above the opening price. So you can see that in this case, it tried to push lower. In the first candle, it tried to push lower. It closed off. In the second candle, it tried to push lower again, but buyers came back into force, pushing price back up. And then subsequent move is towards upside. Tweezer bottoms, in this case, it doesn't have to close off even. It doesn't have to close off at the same level. It can actually close off a little bit higher as well. The main thing to pay attention to here is that testing lower, but failing to go lower and pushing back up. Those are showing you that rejection of the lower points to push back up for a reversal. Again, I like looking at tweezer bottoms or tweezer tops, primarily, especially if it happens at a support or a resistance level to show a rejection of a key level, which will give more strength towards that reversal, right? So top two, first one was the bullish engulfing and the bearish engulfing. And then the second one is the tweezer tops and the tweezer bottom candlestick patterns price action setups. Clearing that out, right? So as I was telling you about the triple candlestick patterns here, triple candlestick patterns do play out very nicely. Triple candlestick patterns do play out very nicely. But what you also want to bear in mind is that it takes time to play out. It takes time to play out Why? Is because if this were a 1 hour chart, you'd have it waiting for 1 hour for that move down, second hour for that doji or somewhat of a doji sitting at a lower level, and then the third one to push higher. Only at that point do you start considering that you're looking for a buying opportunity. So you'd be sitting there waiting for 3 hours, waiting for 3 hours for this setup to form before you could see further upside. But again, if you're waiting for 3 hours, the likelihood is that if this triple candlestick pattern does form, then we're likely to see good upside potential on the triple candlestick patterns because it has taken that time to form. It's taken that time to form. The markets have been trying to sell it down, got exhausted at that support level, tried to close higher. We're looking at further upside. So there is a setup and a confirmation for this pattern to work, and that's why it takes a bit longer to set up, but you can see this working quite well. The morning star is a reversal pattern. The morning star is a reversal pattern for a push towards the upside. The evening star is a reverse flip side of the morning star, where you can see it pushing up, upward candle there, sitting at a, hopefully, or look for it to sit at a resistance level with a doji or indecision level sitting at a resistance level there, and then the next candle closing lower again. This will give you the indication or a possible sell signal that you're looking for further downside following a completion of this evening star pattern, right? So for me, I would look at the candlestick patterns or the triple candlestick patterns mostly on the H1 time frame or on the H4 time frame. But if it's on the H4 time frame, I wouldn't be sitting there waiting for this setup to happen, because that would take 12 hours. It would take 12 hours for this setup to happen. What I would say is that I'll still be looking at my trades. I'll be looking at possible trade setups. And if I do see this happen, and if I were to be looking at selling from that point towards the downside, this acts as an additional confirmation. It's an additional confirmation for my trade analysis. I'll do this on H4 time frame, just because if you sat there waiting for this, it would take too long, right? Then the next triple candlestick pattern is the 3 black crows or the 3 white soldiers. So what's the 3 black crows? It's not so much in the name, but in terms of how the price had been moving, is that you can see if this was a big upward move, and given that it's hit a resistance level, you can see a rejection, right? You would have that. You can see that you have a setup pattern there as well, but you also see that candles are moving down, or the 3 next candles moving towards the downside clearly shows a rejection of that resistance level already, right? So the 3 black crows again is a good signal or confirmation of a signal towards a reversal. You can see 3 candles, whether it's on the H1, whether it's on the H1, the M15, or the H4 time frame, 3 candles rejecting a resistance level towards the downside is a good confirmation or a good indication that we're likely to see further downside on the chart. On the other hand, the 3 white soldiers, if we've seen that downward move, hitting a support level, and then 3 green candles or 3 white candles or 3 upward candles pushing higher, right? You can see that as an indication for further upside or reversal towards upside on the formation of that 3 white soldiers. Even better still is that if we had an upward trend, a small correction towards the downside, bouncing off a support level, again, that gives you the indication of further upside on the formation of that 3 white soldiers. right? So quite a few setups here, setups that could happen very quickly on the one candlestick pattern, setups that could happen moderately quickly on two candlestick patterns, and also those on the triple candlestick patterns, which would take a little bit longer to set up, but will have better trading targets, right? So if you have waited for these three white soldiers to form, what we're likely to see is that to look at buying opportunities there, you could actually be looking for significant upside given the formation of the three white soldiers. And also what I have found is that usually with that formation of a chart of a triple candlestick chart pattern is that at that point, usually we'll have not just a technical reason to buy in, but you might also find some fundamental reasons causing that reversal towards the upside. You might see good employment data or interest rates decisions being released, or retail sales numbers indicating some positivity or even negativity into the markets, pushing that price towards the upside. So what I find is that, with that setup, it's great. Just a chart pattern, just a candlestick pattern alone is a good setup. If you have it with trend, even better. Support, resistance, fantastic. And then if you have a fundamental reason behind it as well, then you've got the whole confluence of fundamentals and technicals and patterns driving this trade analysis, giving you more confidence to your trade analysis towards the upside. Right, so with that, what I'll do as well now is that we've got a couple of minutes. If you have any questions, please feel free to ask it into the comments. If not, what I would do is I'll just quickly go through look at the charts and look into some possible trade or candlestick setups that we might see here. Let's find my way around this. Right, so this is the Aussie dollar on the H. Okay, great. You can see that set up straight away there. You can see that big move. This is Aussie dollar on the H4 time frame, that big move towards the downside. Again, that is a bit of a overdrawn three black crows towards the downside, but we're looking at further downside move. If I looked at it on H1 time frame, you can see there again we got that formation of that pattern. Again, that formation of that pattern there towards further downside. So again, if you see that formation of a hammer, a bit of an indecision there, we can see some small upside, but because trend has been pushing that much lower, it's going to form a bit of an indecision. Even an upward move against the trend or counter trend is not likely to have a very big upside. We're likely to see it come up before tracking lower again. Went into the euro dollar or Swiss franc. You can see that move. You can see that move towards the upside. We're looking at further upside. Again, three white soldiers. So you can see that in this case, following the trend, small retracement back down, the three white soldier towards the upside, anticipating further upside move here on the Swiss dollar Swiss. So that's again one of our three candlestick pattern setups. Looking at the euro dollar here. What else should we look for? We can let's look for a tweezer tops and tweezer bottoms. Not easy to find tweezer tops and tweezer bottoms. This could be not a great example, but a slight example there where you can see that there was a bit of a resistance formed here. and then price tried to go up, tested higher, rejected. Next candle, price tracked, tested higher, but rejected, and then the next move was towards the downside. This is on the H1 time frame on the euro dollar. So a not exact perfect example of the Twizzler tops, but let's close. You can see again here. Nope. Okay, here you might see one there as well. So it tried to go higher, tested before it closed back down again, and then that big move again with that the three black crows pushing lower. So in this point, you can see that we've got multiple chart patterns coming to play, not just the Twizzler tops, but also the three black crows pushing the euro dollar down, and in this case, rejecting that 1.0560 level, right? Pushing down again, and also with the dollar, with the euro weakness, all that coming together, pushing the euro dollar towards the downside. So several reasons there, pushing the euro dollar down, not just on the candlestick patterns. Any questions so far? Let me just check. All right, so far so good. US yen here. Let me see any patterns. Here we go. This is a bit of an engulfing. So there's a bullish engulfing. We've seen this try to go up, close below, and then the next candle, this is on H1 time frame, closed up above the previous candle, closed higher, and it happened at a 135.40 or 135.50 support level, pushing higher. So in this case, a bullish engulfing candle forming, or bullish engulfing pattern, two candlestick pattern forming, indicating the expectation for further upside. What we saw here is that following this bullish engulfing, we saw that push towards upside, towards that 136.50 level, right? So quite happy to have found quite a few trade setup or patterns here. Again, quick bullish engulfing there, tried to go lower, hit that support level, we can see here, and then the next candle tested above, closed above the previous downward candle for that upside move. Okay, very messy there. So what I also want to show you, the last part of it, is also if you looked at this on the smaller time frame. Well, on the smaller time frame, you're likely to find a lot more possible trade setups, a lot more chart pattern setups, but you're also likely to get a lot more noise, right? You're likely to get a lot more noise. In this case, just find something. Okay, in this case, for example, not a perfect setup, but in this case, you can see that it tried to go lower, tested up, the next candle tried to go lower, but then tested and closed above. This could actually be looking at a Twizzler bottom setup, but in this case, what we're looking at is price hasn't gone above. It's actually looks like it's trying to close lower again, or as we speak, it's closing lower again. So in this case, you would say that this setup hasn't formed too well, or hasn't resulted too well, because this is on a smaller time frame. So my best advice to a lot of you, or most of you watching, is that if you are looking to jump onto, chart patterns, price action setups, possibly not look at it on the smaller time frame. I would say keep it to the H1 time frame, or even the H4 time frame if you can. At the very least, the H1. Because if you looked at it on the time frame which is too small, then you're going to see a lot of noise. You're going to see a lot of noise, and you might be jumping into trades which are not properly set up, not yet, right? In this case, you can see that this setup here, dollar yen on the H1 time frame, tested higher, but closed down again, looking for further downside. We seem like if this hour closes well, and possibly the next hour closing, we could again have that 3 black crows towards the downside, possibly anticipating some downward move on the dollar yen towards that 136.64 level. But bear in mind that the disclaimer still applies if you are looking to jump into any trades. Please do your own analysis. This is all solely for education, just to share with you how I look at price action and the chart patterns and chart setups, rather than actually, this is not for any trade recommendations or trade, for any trade recommendations. So in that as well, a bit of an engulfing there. One last one, let's look at pound dollar. Pound dollar has been tracking lower. You can see that's a big, strong bearish engulfing candle towards the downside, indicating that we might see further downside on the pound dollar. But I haven't jumped into this trade because I'm looking at, let me zoom out and see if I can find it. I'm looking at this round number. I'm looking at this round number of 1.18 as a key support level. I'm looking for that to break below the support before I would consider any selling opportunities. So, it's not just, for me, it's not just about looking at the price action. I love the price action to tell me to be ready or to get ready to sell. Oops, no, not that. But I love the price action to tell me we might see that downward formation pushing lower towards that 1.18 level, but I would look for price action combined with some technical analysis. Look for price action to combine with that support level, and if it does break that support level, I have trend towards downside. I have price breaking that 1.18 level. I would have price action, or the triple candlestick patterns telling me that we can anticipate further downside. Then we can see this pushing lower. We could be looking at the pound dollar breaking that 1.18 level towards the downside quite significantly, right? So that was the pound dollar analysis. We looked at the euro. Okay, this will be something interesting as well. The Kiwi dollar. So Kiwi dollar, I showed you this on the H4 time frame, is that it is currently sitting again at a round number level at this 0.61 level. So you can see that Kiwi dollar sitting at this 0.61 level, and we've seen a lot of indecision. We've seen that try test lower, not much movement at this point. Looking like we might see it sit at this point. Why? It's because we do have the RBNC with an interest rate decision to be released tomorrow. That's why we're seeing some test. I'll zoom in a bit so it's easy to see. We can see that doji forming. We can see a bit of a doji forming towards the upside. We can see that indecision happening at this 0.61 level, indicating that markets or participants are staying a bit undecided on the Kiwi dollar, awaiting that news, awaiting the news of the RBNZ with their rates decision tomorrow morning. We could see, a 50 basis point increase in terms of interest rates. That's why that price action is showing you that it tried to go higher, but it hasn't. It's tested there. It tried to go lower, but it hasn't. It's testing there. It might sit there at this level, leading up into that news decision. Right. So with that, any questions so far? Right. I have one asking about the US CAD. So US CAD at the US CAD, similar to the Kiwi dollar, sitting at this 1.30 level. You can see again, push towards upside, tested higher, but closed. In this case, it didn't close below that previous candle, so it's not really a bearish engulfing yet. And then that's why we see that push towards the upside. Not yet a 3 white soldier because we saw that a bit of an indecision there. So we've got 2 forming, and then a third one looking like it might even form to be a tweezer top formation here on H4 time frame. And if that does happen, then we might see some downside on the US CAD. Also because we do have the Bank of Canada with their interest rate decision to be released, looking at 75 basis points increase from the Bank of Canada. And if that does happen, then we might see that downside on the US CAD, or we might see some strength towards the Canadian dollars leading to the downside in the US CAD. So a lot of reasons why we see price action forming, especially at key levels. It gives you that hint on an indication into what could be coming up. If that forms as a tweezer top, then I would love to see the subsequent move. And those of you who are joining us, maybe something to pay attention to, something to watch coming up into the Bank of Canada's rate decision is whether this move forms and we do see the rejection, putting into application the my voice is going. Putting into application the analysis of the chart patterns that we've just gone through together, right? With that, you can see that that's actually forming up quite nicely. The US CAD on the H1 time frame again tested up, and looks like in 4 minutes it could be closing towards the downside. This might be forming up on the H1 time frame as a tweezer top, indicating possibly that reversal towards the downside from this 1.30. Again, please do your own analysis, manage your risk closely. Do not take this as a trade recommendation. It is just to show you examples of some price action setups that is currently forming. All right. One last one. Let's look at the pound yen. Look at that, pound yen, 3 black crows forming towards the downside. In this hour, if it does break below this 162 level, we could see significant downside on the pound yen, similar to what happened previously. It does need to, this needs to form, this 3 candlestick pattern needs to form towards the downside below this 162 level. We could see quite significant move, possibly towards the 160 support level next. All right, so with that, I hope you had a good session. If you have any questions, let me just check. If you have any questions, please feel free to ask. If you have any questions, please feel free to ask. If not, I hope you gained quite a bit. I hope you learned about the price action setups, some trade setups that we've spoken about. You might want to keep an eye on it. You might want to see what happens with those trade setups. But with that, thank you for your session. I hope that Desmond will be back at the next session, and then he'll be guiding you through the next topics as well. With that, take care, trade well, trade safe, and I'll see you again. Bye-bye now.